Right now, it's negative 1137.
Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, June 3rd. Well, it's another night of defensive trade for the grain and oilseed markets. We have the wheat market down around 2 cents, the corn market down 3, the bean market down 5, the meal market down around $1.50, and the soybean oil market down around 20 points. All markets still hovering near their lows of the move, that being more so for the wheat, corn, and soybean oil than for the beans and or the meal. And all markets continue to remain a little bit on the defensive and lack the buying interest after yesterday's crop progress and condition reports, where both the crop progress and the conditions were at average and or above trade guesses, both as far as our plantings of the corn and bean crop and the hard red spring crop, and or the conditions for the first time for the corn coming out at 76% good excellent versus 70% trade estimate, and or the bean plantings running now ahead of average. And so we've caught up with our plantings, we're above average, our conditions are good, the weather forecast going forward is conducive. And so as we work our way forward, if we find out that these conditions stay that way, the surprising thing yesterday with the trade action starting off a new month was that the open interest increased across the board. So a combination of new shorts and new longs coming into the market. If we recall, the last commitment of traders report showed that the trade was still holding net long positions, and underneath this guise of us having these good conditions, good progress, good weather, that the longs would be kind of getting a little bit pressured in getting out of their positions. But yesterday, with the weakness that we saw and in the overnight trade with open interest going on up, the longs are still holding on. We're getting new shorts coming into the marketplace. And so once again, going forward, we think that this could be a recipe for further declines in the marketplace if we stay on the present course of the conditions staying good and progress, once again, continuing to be made, enhancing our yield and our supply potential. Other than that, the overnight news was kind of quiet. China's prices, they came back from their holiday. They were on the defensive. The Malaysian palm oil market was making 7.5-year lows. World prices, as far as corn and wheat go, remain on the defensive and cheaper than us. So no good storyline there. The only storyline continues to be the old crop beans and meal, where we're still trying to ration our supply. The export number for beans yesterday remains constructive. And what of importance and or of interest to the trade will be tomorrow's trade balance numbers. They'll be coming out with the bean monthly exports and imports for the month of April. And the trade will be kind of honing in to see how many imports of beans we took in during the month of April, because here we are trying to ration our bean supply, and at this point in time, it really isn't the case that we're doing a good job, and thus what we saw yesterday, the explosion in the old crop, new crop spreads, and that will continue as far as a trend to the upside if we find out that we're not rationing and or importing the beans we need down the road. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.
But whoever gets it. So 4743.